On today's video, we're going to look at the seasonal tendencies for Brent crude oil futures. Before we get started, please pay attention to the risk disclaimer at the bottom of the page. If you intend to trade commodities, risk capital should be utilized and there are risks involved. So please read the disclaimer below before you contemplate trading. Thank you. Okay. So we start with our website, ccstrade.com. Go to quotes and charts, futures seasonal charts, and as you can see, we've got all the seasonals listed for all the major commodities. For today's illustration, we're going to look at Brent crude oil. You click on Brent, and this chart comes up. Let me explain what it all means. The black line is the current contract price going into early March of 2017. Okay, the red one, 5-year seasonal chart, green 10-year seasonal, and blue is 15-year seasonal. What does it mean? It means that if you would have taken the average price of crude oil over the last 5 years for each day and plotted it on this graph, this is what it would look like. So it kind of gives you a projection how crude oil traded for this time frame over the last 5 years, for this time frame over the last 10 years, and for this time frame over the last 15 years. Okay, so can you trade off of seasonals? I guess it's possible. I wouldn't recommend it. The seasonals aren't perfect, and there's no guarantee that an up seasonal is going to make this year's price go up. It's good to know and it's insightful, but you got to be careful on how you use it. So let's look at this chart and see if there's an opportunity here. I like to look at the current price and see if it's in sync with the seasonals. And what I mean by that is it following it? Like, did the real low come in when there was a low due, or did it shift over a little? To me, this kind of looks like it shifted, like this low should be here in this price level, then these lows should be here, and then these lows should be here. Based on that, they're all lined up with the price, and it should, based on these seasonals, it has a tendency to make the low in this early 2017 time frame and rally up to at least May. Now, if you can see, that really hasn't been occurring. If you would have gone long here on these bottoms, you would have bought the crude close to the Brent crude oil close to 58, and right now it's close to 56. You'd be losing pretty good on it. So that's why you can't just buy it because of the seasonal. However, you can use reversal patterns and technical analysis to enter, as long as you define your risk. I've put together a list of 10 trading rules, and there's a reversal pattern in those rules, so be sure and sign up for it. At the end of this video, you click the See More button, and you just provide your email address, and we'll send you the rules free. So check us out, Capital Commodity Services. We've been in business since 1983, serving futures traders worldwide. We've got a lot to offer. Historical charts, every chart, every commodity, every year going back to 1959 in some instances. Seasonal charts, spread charts. You could plot corn versus wheat, gold versus silver, July beans versus November beans, whatever you want on these spread charts. Live streaming quotes and charts, tons of research. So check us out. Sign up for the 12 trading rules, and I hope you found the video informing.